The CRED / US dollar. First off, read this disclaimer carefully and do your good deed of today by liking and subscribing. So here we have the CRED / US dollar, DCR / USD. So here is the website, Community Directed Superior Store of Value. So secure, adaptable, sustainable. So the CRED continuously funds its treasury with 10% of each block reward and employs a flexible contractor model that allows contributors to receive compensation for their work. This makes the CRED a sustainable and self-funded, decentralized, autonomous organization. Yeah, that's definitively smart. Okay, here is the chart. Big picture, weekly data points. We are currently testing the very important green 50-week moving average. It's been solid resistance in the past, and recently it has been a support level. In other words, it's a moving average that is watched for good reason by many people. We are currently testing it very ferociously. So 1, 2, 3, 4, 5, 6 weeks, we have tested and played around with that moving average. That's a bit of a difference from what we have seen recently, where the bulls come in and they buy. So we are currently at support. So we have to give the benefit of the doubt to the bulls, technically. But they have had a lot of opportunities now to rally. And the bears are watching, and also you do have people who are of course long the CRED, and they are waiting, and there's going to, unless we get a rally soon, there could be some panic, simply because why aren't the bulls buying? Why isn't this attracting new buyers, and also why isn't it emboldening the current bulls to add to their positions? So yeah, a bit of a messy situation here. We do have resistance from the purple 20-week moving average right above us. Looking here at the daily data points, yeah, it's a bit of a messy situation. You did have some time cycles here. We are below a lot of key moving averages, like the blue 100 and the red 200-day moving average. So they are going to complicate any kind of trip to the upside. So we are basically in this very noisy zone. We do have some horizontal support, some moving average as far as the faster moving averages, but then we have a bunch of resistance. So it's messy. It is simply just messy. Looking here at the weekly data points. Yeah, we have seen some very substantial deterioration here in the MACD. If we go here to the daily data points, so here are the daily data points. So here you can see that deterioration here in the MACD. MACD deteriorating in and of itself is not like something to interpret necessarily as bearish. It can be healthy. To just cool down MACD and also things like the RSI. It's more about how it's done, because some of the best buying opportunities, they will be when the RSI and moving averages look just nasty, when the bears have taken it very far, and also the opposite is the case. So given that we do have support here at the green 50-week moving average, still, if we were to lose it, that would clearly be bearish. So we have that context of, okay, we have seen some great deterioration here in bullish momentum, but we are at support. So I am leaning a bit bullish here, but it is very contingent on that support level holding. Okay, so here are some correlations. So we have an 84% positive with the S&P 500 long term, weekly data points, that is. 94% positive here with the Bitcoin US dollar pair. So they do move very strongly together. Then we have a 34% positive correlation with gold. And then you have minus 64% here with the dollar index. So here are the daily data points. 38% positive with S&P 500. Then we just have a 24% positive here with Bitcoin. And then you have a 22% positive here with the gold, and minus 18-ish with the US dollar index. Then we have the seasonality. So over the last 5 years, we do see that November is it's the strongest month. We close higher 75% of the time, and the average gain is a massive 47.6%. So November can be really good for the cred. So let's sum up. Number one, we are at key moving average support. We have seen a substantial cool down, MACD, RSI, you name it. There's not been much bullish action here for the cred. That can be interpreted as value, that it's been repriced and that it's a good opportunity for bulls. Then you have the seasonality for the coming month that looks really good. So I think that this is I would lean bullish. But the bullish thesis is very contingent on that support holding. The bulls have no excuse, for losing the 50-week moving average, especially now with this incredible seasonality for November. So yeah, it's all about that moving average. I'm leaning bullish. The problem I do have, beyond what I have stated, that would be Bitcoin. I'm not a huge fan of the move Bitcoin made. We did have that ETF that went. Finally, we got the Bitcoin ETF. If you look at what happened when, we got the Bitcoin futures, and look at other basic news events for Bitcoin, then there has been a tendency for the market to rally and then correct.